Welcome to the Explainer from Talk Tickers. Today, we're breaking down Rubrik's fourth quarter earnings. And folks, this one is a classic. It's a textbook case of a company absolutely knocking it out of the park, and the market just kind of shrugging. We're going to dig into why. Okay, so here's our game plan. We'll kick things off with the headline numbers, the snapshot. Then we'll get into the story behind those numbers. After that, we've got to talk about the market's weird reaction. And finally, we'll give you our take on what's next, including our rating and even a trade idea.
All right, first up, the earnings snapshot. Let's just look at what happened in Q4, because on paper, these results were pretty much as good as it gets.
So Rubrik came out swinging with non-GAAP earnings per share of 4 cents. Now get this, Wall Street was expecting an 11-cent loss. That is a massive 15-cent beat. Just incredible.
In the top line, same story. Revenue hit $377.7 million. The expectation was way down at $342.3 million. So they didn't just beat, they blew past it by over $35 million.
And this really shows you the underlying momentum. Their subscription annual recurring revenue, that's the key metric we all watch, hit $1.46 billion. That's a super healthy 34% jump year over year. The engine is humming.
So look, the main takeaway here is that this wasn't just a narrow beat. This was a clean sweep, a comprehensive beat and raise quarter across every single metric that matters: EPS, revenue, ARR, and they even generated strong free cash flow. So the big question is, how? How did they deliver such a powerful set of results? Well, the story here is all about a strategic shift that's way bigger than just data backup. On the earnings call, CEO Bipul Sinha laid out this really ambitious new vision. He's talking about Rubrik becoming mission control for companies using AI. So they're moving from just data protection to being the central hub for AI security and governance. That's a huge step up.
And what's really important to see is that their big business model transition is pretty much done. Check this out. High-margin cloud ARR now makes up a whopping 88% of their subscription revenue. The heavy lifting of that whole shift, it's in the rearview mirror. And this isn't just about the core business chugging along. Their new products are absolutely on fire. The identity business, a really key piece of their security offering, more than doubled its customer base, from 400 to over 900 in a single quarter. That's just explosive growth. So this isn't just growth, it's about pure dominance. Management said their win rate against competitors is over 90%, and they're successfully selling more stuff to their existing customers. Those security add-ons make up over 45% of their expansion revenue. The execution is just flawless. So with a report card like that, you'd think the stock would have just gone vertical, right? Yeah. Well, in this market, that is absolutely not what happened. Despite the blowout quarter, despite the strong guidance for what's next, the stock actually fell the next day. It tried to rally a bit before the market opened, but then it just faded with everything else and closed down just over 1%. And that brings us to the real puzzle here, the central conflict of this whole story. Why on earth did the market just shrug off such a powerful report and guide? The answer really is this massive tug of war between Rubrik's perfect execution on one side and the market's incredibly pessimistic sentiment towards all software stocks on the other. Wall Street is worried about AI disruption, the macroeconomy, and it's just crushing valuation multiples for everyone. Rubrik basically turned in an A-plus paper and got a C-plus grade from the market. So this sets up the number one question for any investor looking at this stock. Which of these two powerful forces, the company's amazing execution or the market's sour mood, is going to win out from here? Let's weigh the bull case against the bear case, because that's how we're going to figure out our rating for the stock. The bull case is pretty straightforward. The fundamentals are just too strong to ignore for long, and their strategic move into AI security is a huge deal. The bear case, on the other hand, has almost nothing to do with Rubrik itself. It's all about these external market headwinds and whether this bad tape for software is going to stick around. Our call? Execution wins. It has to. Over time, fundamentals are what drive stock prices. The performance here is simply too compelling, and we believe the stock will eventually be forced to catch up to the incredible momentum in the business. So we are rating the stock outperform. Okay, so if we're rating it outperform, how could you translate that into an actual actionable idea?
Well, for those with a higher risk tolerance who are comfortable with options, one way to express this bullish view is by selling out of the money puts. You're basically taking advantage of the market's fear, which has pumped up options prices. If the stock stays above your strike price, you just keep the cash. If it falls below, you have to buy the shares, but you get them at a discount to today's price.
And finally, we have to say it. This is not financial advice.